Welcome everybody, good afternoon. This is part two of Powering Change. This is an initiative in North Northamptonshire for businesses and community organisations across the area, supporting you in accessing some grant funding for decarbonisation activities and also to develop your own carbon reduction plan to support your net zero journeys. My name's Annalisa. I'm at a organisation called Urban Foresight. I'm joined today by my colleague Claire and also Molly Woods from Smart Carbon, who will be taking you through today's session on carbon reporting. Just before we go into that, just a few housekeeping items. We're muting all attendees for now. There's a great opportunity to either introduce yourself in the chat if you want to, but also post questions in the chat, and you can post those directly to us, or we'd really encourage you to post them to the whole group so that others can see what you're asking. This event is being recorded. It'll also be made available on our YouTube channel. So if you go to poweringchange.urbanforesight.com, you can see a section under events where we've got our previous webinar recorded, and this online event and our subsequent online events will be all available there for you to watch at your leisure. Okay, so today is part two. So welcome to those who were with us on part one a couple of weeks ago. If you were with us, there's a couple of updates around the grants that are available. And if you weren't with us, there's some information on the grants for you. Last time we kind of introduced you to carbon footprinting and why that's important. Today's session is really about going in more depth around why we measure our carbon emissions and where those carbon emissions come from and different sources of carbon emissions and how you start the process of capturing those and reporting those, and the benefits of putting together a carbon reduction plan for you as an organisation. And I'll be introducing you again to Molly to take you through that. But just a reminder first, this programme is supported from the UK Shared Prosperity Fund. So that's a UK government programme that focuses on providing local investment funding to improve pride in place, and kind of increasing life chances, focusing on communities, place, local businesses, and developing people and skills. This whole support package is entirely funded by the UK Shared Prosperity Fund. It's enabled through our partnership with North Northamptonshire Council, and all of the support that's delivered is completely covered by that. So it's all free. The grants themselves are delivered by North Northamptonshire Council, and I'll go to that in a bit more detail. Just who we are. So Urban Foresight, who I work for, we're a place-based innovation consultancy. So we work a lot around net zero and decarbonisation, and we work across the world, not just in the UK. And we really focus on protecting the environment, but improving people's lives as well, and looking at creating new economic opportunities in local areas. Smart Carbon, we've got Molly with us today. They have supported over 1,000 clients already, looking at measuring and reporting their carbon emissions. So they're really well placed to help you develop your own carbon reduction plans. And Molly will come in shortly. So this is just a reminder of the programme for those of you who don't already know. The information itself is available at poweringchange.urbanforesight.com, and now also on the council's website you can see information about the grants. But essentially, as I said, it's a free funding package, funding your decarbonisation activities, creating a carbon reduction plan for you as an organisation and taking you through that so you understand your own carbon footprint, and how to calculate it, and primarily what to do about it and where your biggest source of emissions are and how you can start tackling those. So we've got a series of these educational webinars. This is part two. If you don't manage to catch us this time, we will be repeating these in October as well. So look out for those if you've missed one. But we also have one-to-one support sessions to develop your carbon reduction plan, but also to access that grant funding. And primarily we have a tool that's delivered by Smart Carbon, which is freely accessible to you, that you can dip in and out of as you like through this entire support package, so that you can develop that plan in your own time. Just a reminder about the timelines. associated with this funding. So our support runs until the end of January, and that's your last opportunity to get those carbon reduction plans in place. We really encourage you to start doing that at an earlier point in time, because it gives you the biggest opportunity to go away and get some of the data that you might need, or to have a think about what you want to put into that plan, and also just give you the time to kind of reflect on some of these webinars and understand things in a bit more detail. The grants themselves are open now. They close on the 20th of October. I'll run through some of the details of that in a second. The funding that is associated with those grants for decarbonisation activities has to be used in this financial year. So that means you'll need to deliver the projects that are funded by those grants by the end of February. And then there's a small amount of reporting requirements in March, just to sign off on the projects that have taken place. So the grants are live now. They close on the 20th of October at midday. We have one-to-one support available for you, including technical guidance. So, for example, if you want to look at the potential that you have to install solar on your business or organisation's premises, we've got kind of technical support there that can give you an estimate of what that might look like, and we can guide you through how to get some quotes to incorporate within your grant applications. You can book those one-to-one sessions with us, and we'll make those one-to-one booking sessions live after this webinar. There's a lot more information about these grants available through the council's website. So there's two separate grants available. One is for businesses, one is for community organisations. Business grants are a little more limited. They will offer a total of £5,000, and that's for SMEs looking to increase energy efficiency, move towards a low carbon economy generally, or reduce greenhouse gas emissions in their activities broadly. But there is a 50-50 kind of match funding requirement there. If you're a community organisation, there's a little bit more funding available and there's no match required. Your projects have to really focus on energy efficiency. So that's things like LEDs, solar panels, heating upgrades. You might be looking at air source heat pumps, for example. Decarbonising transport is part of that as well, and looking at other kind of energy saving measures. So things like insulation that will improve the energy efficiency of your premises. As I say, there's more information about that on the website themselves. There's also more information in the first webinar that we held a couple of weeks ago. So do go to our website and check back if you want some more details. You can put your questions in the chat today if you want. We'll look at those at the end if we've got time at the end of this webinar. Our website address is there so that you can book onto those one-to-one sessions, and there's a link there also to catch up on those previous webinars. Okay, so without further ado, I shall pass you over to Molly, who's going to take us through carbon footprints and reporting. Okay, over to you, Molly.
Thanks very much, Annalisa, and hello everyone. Nice to see lots of people attending today. Next slide, please, Annalisa. So just to add to the introduction to Smart Carbon that Annalisa's already provided for you, just the three sort of aspects of what we do at Smart Carbon. We often start with offering training courses for clients. We deliver training courses through Northumbria University to get people up to speed with the climate emergency and how to go about reporting. The principles of that training is going to be delivered for yourselves through these webinars. So that's kind of an alternative way of getting that expertise imparted to yourselves. A big part of what we do is we host the online reporting platform, the Smart Carbon platform, and then that is accompanied by a team of consultants who work with you to help you to go about doing that reporting. Next one, please. So what I'm going to cover in the next 20 minutes or so is just a little bit of a recap on things that we covered in the first webinar. So hopefully not too much kind of repetitiveness for those who came along for the first one. And then what I'm going to focus on today is looking at the first step, which is collating all of your data and knowing what data you need to find to be able to enable you to do your footprint. And then in the next webinar is when we'll talk about how to actually enter that data into the platform, and then what happens after that in terms of creating your carbon reduction plan. So the first thing, just to recap on, is what is a carbon footprint and why should we calculate it? So the Greenhouse Gas Protocol is standard. It's a protocol that is the most widely recognised sort of guidance around how you go about carbon reporting. And they define a carbon footprint as the total set of greenhouse gas emissions, abbreviated to GHG, caused directly and indirectly by an individual, event, organisation or product expressed as CO2e. And what we are looking at in relation to this programme and yourselves is the carbon footprint of your organisation, and that over the duration of 1 year. Next, please. So when it talks about CO2e, what that is referring to is the fact that there are 7 different greenhouse gases that all contribute to global warming. And those are carbon dioxide, methane, nitrous oxide, and 4 different fluorinated gases, which are man-made gases. And what happens in a carbon footprint is all of those different types of gases are measured in terms of how much carbon dioxide would be needed to create the same amount of warming as the individual gases. So that's where the E comes from. That's the equivalent amount of carbon dioxide. So carbon dioxide, the reason why we talk about carbon this and carbon that is because carbon dioxide is the most prevalent greenhouse gas. Around 75% of all greenhouse gases is carbon dioxide. And of that, around 75% comes from burning fossil fuels. So that's why most of the emphasis is around getting away from burning fossil fuels for our energy. Methane is less abundant. There's 18% of the greenhouse gases is methane, and that mainly comes from livestock digestive processes and also from decomposition, such as landfill. But it's 27 times as potent as carbon dioxide in terms of trapping heat. Then when we look at the other 2 categories, the amounts are smaller still, but their potency is much, much greater. So nitrous oxide, 273 times as potent, and it mainly comes from fertilizer. And then fluorinated gas is a tiny amount, 2%, but they're like tens of thousands of times more potent. And typically you might find those in refrigeration and air conditioning. So that might be where it's relevant to yourselves. Next, please. So most importantly, why measure? Why is it worth your while actually getting involved with us to do this, rather than just cracking on and doing energy saving type activities? What it does, it really helps you to be more effective in knowing how to reduce your carbon footprint. So it's all about discovering which parts of your organisation are the most, have the biggest impact in terms of carbon. And then you can look at prioritising what action you're going to take so that you hit those high impact areas. It also allows you to set a target, and that might be net zero by 2040, 2050, whatever's right for you. And you can then monitor against your success in reaching that target. So it's a real kind of measured, real progress that you're monitoring there, rather than just your assumptions around how close you're getting to saving energy. So that's kind of, I suppose, the real reasons behind it. And then some practical reasons might be because people require you to do it, and that might be regulators. Regulations are more relevant to large businesses, but also if your customer, for example, is a large business, that might then cascade to you as a requirement that you have to be reporting and reducing your carbon as well. Or it might be if you have just kind of smaller members of the public, your customers, it might be their own requirements around being more sustainable. And it might be that if you have funders or investors want to invest in your company, they might also want to see that you're considering your carbon footprint. Next, please, Annalisa. So we're going to go on to some new stuff now, and the first we're going to look at is what we mean by scopes 1, 2, and 3, which might be terms that you probably will have heard of. Next one, please. So again, this terminology emerges from the Greenhouse Gas Protocol, and this diagram is from that protocol. What it does, it separates out gases, emissions, into the 3 scopes. And the reason for doing that is so that if we were to add up carbon footprints of everyone, say in the country, we wouldn't be double counting emissions, because it's people, there's emissions that are directly from you, and then there are indirect emissions that are using things that other people have produced, for example. So what we include in scope 1 is the emissions, the gases that come directly out of your own facilities and your own assets. So if you imagine you had a plastic bag and you wrapped it around your building or around your company vehicle, it's the gases that you trap that come out the chimney or out the tailpipe. Scope 2 is electricity, and I will come on to that in a second. And then Scope 3 is indirect emissions from everything that you consume and everything that then happens as a result of your organisation, what happens next. So the first set of emissions are called upstream emissions or upstream activities, and the second set of emissions are called downstream emissions, downstream activities. So you're indirectly responsible for those because they're happening to serve you or because of you, but they're not actually gases that are coming out of your assets. So if you could just click on, please, Annalisa, just to highlight the reason why the fuel use used. So in scope 1 in company facilities, that would include the fuel that you burn on site, such as kind of gas in your heating or diesel in your generators, or kind of these F gases that we talked about, the fluorinated gases that might have escaped from your air conditioning system, which are actually coming out of your chimney. That's separate from your electricity use, even though it's still energy use, because electricity is most likely to be generated off-site in a power station, and then the emissions from perhaps burning the gas to create the electricity is coming out of somebody else's asset. So that's why it's in its separate scope in scope 2. Next one, please. So when we talk about your assets, your kind of scope 1 and scope 2, we need to define what we mean by yours. And it comes around again, some terminology in the protocol around the approach you take into deciding or defining what's yours. We've decided for these purposes, we're going to take an operational control approach for all of your organisations. And what that means is that if you have operational control over your operation, over your asset, then that is yours. That is then counted for in scope 1 and scope 2. So what that means is if you own that building, you are in control of everything that happens in that building, then therefore you have operational control over that building, and the emissions from your energy use is in scope 1 and scope 2. Similarly, if you rented the building but you didn't own it, but you still had control over how you use that building and how much energy you used, to some degree, you might have not complete control, and you pay the energy bills. Again, you have operational control, and those emissions are included in scope 1 and scope 2. The difference would be if you're in, say, a serviced building where you have absolutely no control over the energy consumptions and you don't pay the energy bills, you just turn up and do your thing in that building, then they're excluded from scope 1 and scope 2. But we do then include those as indirect emissions. So it's not really something to worry about, but it's something to be aware of because you have to define the approach you're taking. Next one, please. So what we're going to look at now is how many of these categories are we going to include in your carbon footprint. So the greenhouse gas protocol is set up to account for everything. So it's scope 1, scope 2, and all of those 15 subcategories of scope 3. Now, different standards, different customers, different regulators require you to include different combinations of those categories of scope 3. If you can click on, please, Annalisa, first click. What we want to do is to make sure that your reporting enables you to be compliant if you were to bid for any major public sector tenders. So to give you the best opportunity of being prepared to bid for those. And as we mentioned in the first webinar, it might be that even if it's not a major tender, it might be that a public sector organisation has chosen to require it anyway as a standard they want to achieve. And what that PPN procurement note requires is that you report on scope 1 and scope 2, and then 5 categories of scope 3, which are those that have got the circles around them: transportation and distribution, and that's both upstream and downstream, waste, business travel, employee commuting. And those are the 5 that you have to report on to do that. So they're going to be included in your carbon footprint. Next click, please, Annalisa. This category in the dark green fuel and energy related activities. This is additional emissions associated with your energy usage, and it's to do with mainly to do with, say, digging up or drilling for oil, and then that oil getting transported to a power station, for example, or whatever it might be. So it's not directly included in Scope 1 or Scope 2. It's an add-on emission, sorry, an extra type of activity that contributes to fuel-related emissions. It's calculated automatically. You don't have to worry about it, but it will be included for completeness in your carbon footprint. The two additional categories that are circled in the light green, we will be including those because they can be very, very significant. So these are all of the goods and services that you purchase and you use within your business. So for some businesses, this can maybe represent between, I don't know, 50 to 90% of your emissions, perhaps, depending on what you do. So if you ignore it completely, it's a massive hole in your carbon footprint. So at Smart Carbon, we don't like to do a footprint that excludes that. And similarly, capital goods, they may be one-offs, but if you, for example, bought a new vehicle in a particular year, that again is quite significant. So it's really good practice to include that. The one highlighted in the yellowy orange there is the upstream leased assets, but that will only be relevant if, like I just explained, if you happen to use a serviced building where you're not in control, you don't have operational control over your energy use, that's where you'd put that energy usage instead of in Scope 1 and Scope 2. Next one, please. So what we'll do in terms of your account on the Smart Carbon platform, we will configure it to show those different categories. So everything else, those other categories that are the downstream categories, they won't be on it, so they won't distract you. They just won't be there for you to worry about. If you do decide at a later point in time outside of this program that you want to continue and we do want to report more fully, then they can be opened up at a later date. What we'll then do within your account is within each of those lines, we will then tailor it to your specific activity. So we will select, for example, if it's gas you use or if it's wood, if you've got a biomass boiler, for example, we will choose the specific type of activity to suit you. And that information is the information that we'll be asking you in the online form, which we'll mention shortly. Next one, please. So just going to go through some principles now of the way we approach greenhouse gas reporting. These are the principles set out in the Greenhouse Gas Protocol: transparency, relevance, accuracy, consistency, and completeness. And some of these are a balance between one balances with the other. So it's not always possible to do absolutely everything 100% accurately. So it's how you deal with that. So taking the first one, transparency. This is all about if you have to estimate something, making your best estimate based on whatever evidence you've got available. What you should do is you should record any assumptions you've made, how you've made those estimates. So you've got a clear audit trail about how you've gone about producing your carbon footprint. Relevance is about reporting on those things that are relevant to your organisation. So if you don't have anything related to a certain category, such as the upstream leased assets that I talked about, you don't have to report on it because it's not relevant. But if it is relevant to you, you should be reporting on it. Accuracy. The idea is to report as accurately as you can, and we'll come on to that in a minute about kind of what format of information we require that's got different levels of accuracy attached to it. Consistency is all about ideally you'll do this once for your baseline and then you will continue to do it year on year so you can track how you're reducing your carbon over time. And ideally what you want to do is report in the same way so that when you compare the next year to this year, you can see you're comparing like for like. So again, it's about keeping a kind of track of how you've done it. So when you go to do it again, you do it in the same way. And completeness is about not leaving gaps, really, not leaving stuff out because it's difficult to find the information. It's trying to be as complete as possible to give a complete picture of your full carbon footprint. If you do exclude anything, what you're supposed to do is then specifically state why you've excluded it and have a good reason for excluding something. Next slide, please. So in terms of accuracy, the protocol talks about two different types of data. There's primary data and there's secondary data. Primary data is a very specific measurement of how much resource you're consuming. So, for example, it might be 10 litres of diesel, or it might be 1,000 kilowatt hours of electricity. And it's more accurate than secondary data, which is, for example, how much money you've spent on diesel. So the way we've already selected for you, or we will have selected for you when you get your template, what level of accuracy you'll be aiming at in different categories. And it's a balance between using that more accurate primary data where it's most readily available for you. So you should be able to access your energy consumption for your building, for example. But when it comes to things that are less difficult to get that primary data, so for example, business travel, it might be quite difficult for you to collate the amount of fuel that's been used in your various staff members traveling for business, but you probably will have the amount they've claimed for mileage. So we will, in that instance, we will use the basis of the reporting will be on the amount spent in that particular category. Next one, please. We talked about completeness before. So if there are data gaps, see what you can do to try and obtain it. Try not to give up straight away. If it's a question of asking your landlord for energy bills, see if you can do that. Do a little bit of digging if you can. If you still can't get your hands on the data, you are allowed to make estimates. As I said, they should really be sort of evidence-based. So if you don't know your electricity use, say for June, but you've got it for the previous June, you might use the previous June as a best guess, best estimate for this June, for example. And again, if you've got to make an estimate, document what it is that you've used to make those estimates. Next one, please. So what I'm going to do now in the next 10 minutes or so is I'm going to go through what data you need to collect. The purpose of, I've got quite a lot of information on the slides. These slides are going to get sent out afterwards. So this is really kind of, so you can use this as your instruction manual if you want to come back to it and you want to, okay, I need to collect my data on this. How is it that I need to collect that? What we've also got for you, which we'll send, is a data tracker. It's up to you whether or not you use it. We find it useful, and lots of our clients find it useful. And it's a spreadsheet, it lists the data you need to collect, identifies who within your organisation is responsible for collecting it and where it is. It allows you to track how far you've got in collecting it. It gives you that place to log any of those assumptions or estimations. And you can also, if you want, if it's helpful, log your progress in uploading it into the calculator. So that's there for you to use, and we'll send that to you. Other things we'd advise before you get going is to set up some kind of central storage location for all of your data files, because you will be grabbing data from lots of different places. If you file it all together, it's more helpful for you. If you can structure your folders and name the files logically, again, it's much easier for you to find what you need and to compare it if you come back to it the following year and you want to do it again. You also might find it useful to create summary files, whether that's in Excel if you're used to using Excel, or it might be in some other format for adding things up. So if you've got energy bills, but you want to summarize what they are over the year, if you've just got individual months bills, you might need to create some summary files. Next one, please. This is just a screenshot of what the data tracker looks like. I won't go into that, but that's just to see what it looks like. Again, completely optional whether you find it useful to use. Next one, please. Okay, so we're going to go through now each of the different scopes and the categories, what it is you're expected to collect and how you should go about it. So the first one, scope 1. So just to remind you, this is about your facilities and your company vehicles, so vehicles and buildings that you have operational control over that are kind of yours. So there's heating fuel, and it's every different type of heating fuel that you've got. It may just be one type, you may have a couple of different types. So if it's gas, it would be in kilowatt hours, oil, it would be in litres, wood pellets would be in tonnes. So whatever it is that's relevant to you, and you'd find that in your energy bills. And there would only be, say, for example, you've got more than 1 metre or you've got more than one building, you'd add all those together. So you've got one amount across your whole organisation for the different type of fuel. The fugitive F gases, So these have got kind of reference numbers. There's different types of numbers for different types of gases. So a typical one is R404A. You might find this if you have air condition that is serviced and the service engineer needs to top it up. That means that some of the gas has escaped, and the amount they top it up by is generally in kilograms. So it might be completely irrelevant to you if you have no air conditioning. But if you do and you've got that information, that's where you can. Company vehicles, we're going to measure this in diesel or petrol. So this is really if you've got a fleet. This isn't business travel. This is if you have a fleet. If it's a so you've got a van that does deliveries, for example, and the information you can generally find is if you use fuel cards and you know in terms of the litres of the fuel you use, and you can find that data. Next one, please. Scope 2, as you mentioned, is purely electricity. Again, get that from your energy bills, and it's in kilowatt hours. It might be that if you've got an EV, electric vehicle charge point, that might be on a separate meter, or it might be on a separate kind of basis that you buy that electricity. So that if you do have that, that can be on a separate line. If it's part of your main electricity meter, that's fine. You just account for it as part of your main electricity. It may also be for a company vehicle, for example, if you've got an electric van, but you charge it off-site, again, you should have records of how much energy you've put into that van. And again, that's where the kilowatt hours goes for your owned or leased electric vehicles. Next one, please. Okay, so we're going to go through all of the scope 3s now. Some of these might not be relevant to you if your organisation doesn't have this kind of activity, but I'm going to go through each of the ones that's included in sort of the scope of this programme. So the first one is category 1, which is purchase goods and services. This is split into 2 types. Water is separated mainly because it's a very specific thing that we all have, and it's usually very easy to get that information, and it's your water usage in meters cubed. Just make sure when you're recording that from your water bill that you are clear about whether it's meters cubed or litres, because it can make a huge difference in the number you put into the account. So just check your units, particularly on that one. Then it's everything else that you've bought as a good or a service. The way we've categorized it on the platform is that we have a list of different categories. There's probably about 8 different categories there. And they are kind of common types of thing that organizations tend to buy as goods or services. And they are by SIC code, so standard industry classification code. So what you'll need to do is to take all of your spend on suppliers, and that's your spend including the VAT, if there's any VAT on that, and then group those into those types of spend that you'll see on the platform. Before you do it, there's a few things you need to make sure you've excluded from that list. The first one is to ensure that we're not double counting. So make sure that you exclude anything you've spent on your energy and fuel bills, for example, because we've already accounted for those emissions by putting in the actual energy usage under scope 1 and scope 2. Take out anything that's classed as a capital good or a capital asset, which we're going to look at in the next slide. Similarly, take out what you pay to your waste provider, because we're going to count for waste separately, and anything you've paid for any organisations that transport and distribute goods for you, because again, they're accounted for separately. So they're the things you need to strip out to avoid double counting. And there's other things that you need to make sure you're not including. You need to focus on what you've spent on receiving goods and services from suppliers. So it shouldn't include salaries, for example, so you don't have to account for what you've paid any staff. Exclude any tax payments to HMRC, so if it's corporation tax or business rates, that's all excluded. And any rent you've paid on leased properties, that's excluded as well. Next one, please. So capital goods, this is done in a very similar way to purchase goods, but it's the difference between what's a capital asset and what's just, I suppose, like a consumable product. So a capital good is a final product. It's got an extended life, and it's something that you would then buy to use to manufacture something else, or to provide a service, or to sell, store, or deliver merchandise. And in terms of sort of accounting, if you want to relate it to that, typically it's things that you treat as a fixed asset or plant, property, and equipment. So PPE in financial accounting. And typically it's things like equipment, machinery, buildings, facilities, vehicles, those kind of bigger assets that have got a sort of a longer term value to them. Next one, please. Category three, scope three, category three is what I mentioned before. These are fuel and energy related activities, and you might see them abbreviated as transmission and distribution related to the electricity grid, and well to tank emissions for fuel. So as I said before, these are automatically calculated in the calculator. So if you put in your the amount of energy you use, it will automatically put in the same amount in category three for your fuel and energy related activities. So don't worry about it. It's just to explain why it's there and what it means. You don't need to enter anything additional into it. And just to note, it's one area of the platform which is under development, and in the near future, it might become even more kind of automatic and less visible to avoid any confusion to anybody. Next one, please. Category four, upstream transportation and distribution. And what this means is the transportation and distribution of things from a supplier to you, or from you to a customer where you've arranged it and you've paid for it. So it's kind of all within your kind of control still. We've split them into 5 different categories. So your sort of standard postal and courier services, and that's probably going to be relevant to everybody. And then for those of you who are more to do with actually producing products, maybe you're a manufacturer or a retailer, and things that come into you, we've split those into air freighting, rail freighting, sea freighting, and warehousing and storage. So those other categories might not be as relevant to some of your organisations. There could be a bit of difficulty if you or you could tie yourself up in knots a little bit with this if you were to take it to the extreme. So theoretically, if you were to buy something from Amazon and you got a stationary delivery, the £3 delivery charge theoretically should go into this category. But if it means that you're going to have to go through every single item you've ever bought and find out from your individual invoices what the delivery cost was and separate that, it's just too much work. This is more aimed at if you regularly use sort of a freighting company or you use a courier, that's where you put the spend. So it's a judgment call really on kind of the significance of the amount you've spent on that particular activity. Next one, please. I've jumped onto category 9. I've gone out of sequence here because this is downstream transportation and distribution. And this is if you have a customer, again, if you're selling stuff, products, it's when a customer arranges to come and collect something from you. So you just leave it at your door and they collect it from you. It's their responsibility. They've paid for it. There's only one category that we've opened up there, and it's for HGVs, and it's measured in ton kilometers. So how many tons of your stuff has traveled how many kilometers? And it's more applicable for if you're, say you're a farmer and you produce milk, and then you've got a supermarket sends their lorry along and they collect a whole load of milk from you to take it to their supermarkets. It may be relevant, it may not be relevant to you whatsoever, in which case it's just zero and you don't have to worry about it. Next one, please. Waste. We've simplified waste as much as we can. We've simplified it into just 3 categories. We've got what it's called on the platform is commercial and industrial waste closed loop. And what that means, closed loop means recycling. So you know it's your recycled waste. And then we've got commercial industrial waste combustion. So that's you might know that more as your general waste, which generally gets sent to, or in this case gets sent to an incineration plant. And then commercial industrial waste landfill. So that's general waste that gets sent to landfill. And all of those is measured in tonnes. Ideally, you would have access to waste transfer notes. So if you had a contract with your waste service provider, they should provide you with waste transfer notes, which should tell you how much weight of waste they're collecting from you. If you don't know that, maybe if you're a community organisation and you more kind of use the residential waste collection, or you don't have kind of that information provided to you, for example, in the next slide, won't go into that just yet. In the next slide, we've got a ready reckoner for you. But just to mention beforehand as well, the other thing you might not know for sure is what happens to your waste after it's collected, your general waste. It's more common for waste to go to incineration now than it is to landfill. You could try to find out. You could look on your waste service provider's website. It might be the council, it might be a private company, and see if you can find out from there. If not, I'd go for waste incineration because it's more likely. So the next slide is just a ready reckoner for the weight of your waste. This I borrowed from, it was published online, it was from Merseyside Recycling and Waste Authority, and it's really handy. What it does is just tells you on the left-hand side the different standard kind of sizes of waste receptacle, from a tiny little food waste paddy up to a large four-wheeled bin, which is probably more relevant to organisations. And then depending on the type of thing that you put in that receptacle, what's sort of the density of the waste. So you'd multiply the volume by that conversion factor in kilograms, and that will tell you for that receptacle what the weight is likely to be for that type of material. And then what you do is, if you were reporting for a month, you say, okay, well, I've got 4 collections in a month, so I times it by 4. But you might think, well, actually, it's only ever half full, so then just times that by 50%, or just halve it. So that's if you don't have it on a waste transfer note or an invoice to tell you actually how much has been collected. Next one, please. Nearly there now. So we're on business travel. Business travel, we've got the different types of travel here. We've got road, rail, flights, and then also hotel stays is included under this category because it's to do with going somewhere else for business and you might stay overnight. Road and rail travel can be just accounted for or measured in terms of the amount of money you've spent on it. So that might well be just from your mileage claim from staff, or it might be expense claims if people bought tickets or ticket invoices or credit card statements, however it is that people book that travel. And for flights, probably far less common that you'll have anybody in your organisation taking a flight, but we have set it so that you measure these in kilometres, in distance, rather than in amount spent. The reason for this is because they can be very carbon intensive, and the cost of flights varies considerably. So you could get a good deal or you could get a bad deal depending on the airline. And it can really kind of throw out the accuracy of your carbon footprint. So for those, for the sake of it being probably quite a small number of flights that you have, we're asking that you work that out in kilometres. What you should have information on is where you flew from and to, and there are various different flight distance calculators online. I just Googled it and lots came up. So you just go on it, put the 2 airports, and then it will tell you how many kilometres. And just remember to do the return journey on that. For hotel stays, all you need to know is the number of nights you stayed in a hotel. And if it was, say, 2 people were there, different rooms, 2 colleagues, then it'd be 2 nights, even though it was just for 1 calendar night. It's 2 nights stay in a hotel. And that's split between a UK hotel and an average global hotel. So if you were anywhere else other than the UK. Next one, please. Employee commuting is really easy. We're not worrying about miles travelled. Again, if you want to get into this at the next stage and do it in far more detail, that's possible. For the purposes of this programme, we're keeping it really simple. And in terms of employees commuting, so it's driving from home to the place of work, it's just in terms of the number of full-time equivalent staff who do commute. Working from home is also accounted for under this category, and it's exactly the same method. It's a number of full-time equivalent staff who regularly work from home. It might be that they work from home part-time, but again, you work it out on this sort of full-time equivalent basis. You might know that already. You might have to do a quick staff survey. If you've got somebody in charge of your sort of HR activities, they might know it. Next one, please. This might be the last one. Keep my fingers crossed here. So upstream leased asset. This is the one that we're only going to add in if you are in a service building. You might not know the energy consumption because you don't pay the electricity bills. Your landlord might not be particularly forthcoming in giving it to you, or you might not be separately metered. So if you can't get the information, you can estimate it. So what you'll need to do is to calculate your floor area or make your best estimation that you can on your floor area. And then on the next slide, please, Annalisa, we've got some benchmarks. So we've got different types of buildings down on the left-hand side. And then what the average energy usage for electricity and gas is in kilowatt hours per metre squared. So you would then just multiply that by your floor area. But it'd be better if you can actually get the actual data, if you can get your hands in it. Next one, please. Okay, that's it from going through all the different types of data. And then just as a reminder for the level of support that we can give you at Smart Carbon. So what we're aiming to do is to empower you as much as we can through these webinars, so that you can collate it and you can enter the data accurately. And because we unfortunately don't have sufficient time within this program to be able to do it for you. So it's all about trying to make sure you know what you're doing so you can do it yourself. We will have an individual review meeting with you. We'll aim for one. If you need another one, if you're struggling, then that's fine. We can organise another one. And that's all about answering questions that you might have on either kind of collating, summarising, estimating your data, or about kind of how you enter it into the platform. What we'll be able to do in that meeting is to sense check what you're doing and answer your questions. We won't be able to go through every single line, compare it to your raw data and check that it's accurate. Unfortunately, there isn't sufficient time in this program to do that. So again, do double check your own data for the accuracy. And then when we come on to it on the carbon reduction plan, we'll be looking at identifying the priority decarbonisation actions rather than quantifying each different reduction potential. But as I said, we are more than happy if anybody wants to commission us to support you in more depth. That's absolutely fine, and we can talk to you about what the associated consultancy package would be around that. Next one, please. Just if we can maybe skip on to the. Let me just check. No, that's fine. We can use that. We can use that slide. So you will get, following this webinar, you'll get some a follow-up email that will link you to the online form, which will gather your information about your organisation, which I mentioned before, and it will ask you things about, for example, what fuel you use in your building, whether you have company vehicles, and that will give us a good starting point for knowing what categories we want to set up on your version of your account. What we'll then do is we also have links to these webinars, the recordings, and the slides will be attached as your instruction manuals. Once we've got that form from you, we will set it up, we will put it specific for your organisation, and we'll send you the login details, and you can then start familiarising yourself with the template. And then what we'll also do is send you a link to book the review meeting with us. We recommend that you leave it a few weeks just to make sure you've had a good go at collating your data and entering the data before you meet with us so that you've got all of your questions ready to ask us. Next one, please. Yeah, that's it from me. So over to questions.
Claire, do we have any questions in the chat?
Yes, we've got one in the chat just now from Heather. She says, I think this is towards Molly as well. I've been helping local organisations to map their CO2 emissions. I've been using the How Bad is Bananas book for common business area conversion factors, but these are getting quite out of date. Do you have a set of CFs that are updated each year?
Yes, we do. So all of the emission factors are updated every year onto the platform, and they're from a variety of different kind of official sources. The most easy to access, sort of commonly available set of emission factors is the government conversion factors that are published every year. What I'll do is I will quickly find the link and I'll put it in the chat for you, because that's quite a wide range of universally available factors that anyone can use.
Perfect. So any other questions anyone might have just now? There we go. Got one from Christopher. Is the carbon reduction plan essential to claiming the grants? I can't see a dummy application for the grants to see what info is required for a grant application.
So I guess I'll take that one. The short answer is no, you don't have to complete a carbon reduction plan for the purposes of accessing the grants. I think it's really helpful that you go through that process as well and look at it at the same time, because it'll highlight potentially some of the areas of your business that might be suitable for decarbonisation that you might not necessarily have known about. So you don't need to complete that plan in order to access the grants. You can just go straight to the grants. And you said, Chris, as well, you can't see kind of a dummy application for that. If you click on the links to the council's website, you should be able to see the information about exactly what's funded, and also get a request for the application form itself, which will take you through what you need to complete for the form. However, we will also be offering those one-to-ones to take you through those grant application forms should you need. So if there's additional information or you're not quite clear about what's needed and what the sort of council will be looking for in those applications, we can kind of talk you through that. And as I said earlier, once this webinar's finished, so either this afternoon or tomorrow, we will have all of the links up there to book in those one-to-one sessions with us at Smart Carbon to look at the grants themselves. And then you'll also get the link separately to complete the form so that you can be registered with the Smart Carbon platform. And you can register on that platform and sort of see what it looks like and get a feel for it, and then sort of book into those subsequent sessions with Smart Carbon. I think just on that, I think we've got another question in the chat, but as a follow-on actually to the previous question, and a question that I have for Molly, is if there's already a business or a community organisation that's done some calculations around their own carbon footprint, is it worth also getting into this carbon reduction plan process as well and signing up to Smart Carbon for that? Is it kind of worth going through the process to check it, or to get a more in-depth feel for your carbon footprint?
Yes, it's absolutely worth it. It's free. You will have already have collected your data to done the version that you've already done. It's possibly worthwhile, depending on what you use to do it, what platform, whether you did it yourself, how confident you are. It might be worth for sort of peace of mind knowing that you've had a sort of a second opinion or a second methodology for doing it, and to double check that it's accurate. So it's worth doing for those reasons. And yes, once we've got that, we can help you then make sure that it's, well, that will then be compliant with the PPN 006 for public sector procurements. So again, it's something to check whether or not the version that it was done in originally is compliant. And then, yes, we can help you then in the second stage, turn that into a carbon reduction plan that covers the right section, so that you've then got that sort of net zero targets built into that. And again, makes you compliant for the tendering.
Super. And yeah, that PPN 006 is for, potentially applies to anybody who is engaging with public sector contracts. So it's a requirement to provide a carbon reduction plan as part of your bid for a tender for any government contract that's over, it's £5 million, isn't it, at the moment, which could include frameworks and things. But I think we're seeing it more and more regularly in smaller contracts than that, or in frameworks, or for other public sector bodies who are looking at that policy procurement notice and saying, well, actually, we want that carbon reduction plan as part of a requirement within our tenders as well. I think that's right, isn't it, Molly? And so actually it's well worth you, if you're ever thinking about working with the public sector at all, in getting one of these carbon reduction plans in place, because it could be a stumbling block to you bidding for work in the future. Cool. Claire, I can see a number of other things come through the chat now.
A couple of other questions just been popped in the chat from Heather again. So she's just asking, has a price been set for access to the recording/reporting tool once this lot of funding expires?
Not yet. We haven't set it yet. I will pick that up with my colleague Lee after this webinar, because he did confirm in the last webinar, which is probably what you're referring to, that there'd be a discounted cost for businesses that have joined through the free programme to then continue it in the next couple of years. But we haven't yet set what that ongoing price will be. But yes, I will follow up on that, and somehow we'll get it out. We'll get it communicated to people. We'll work out how to get that information sent to people.
Perfect. And from Alex, do we have to use the platform or just utilise the template to avoid not being able to continue?
Sorry, I don't understand the question.
I think he's asking if he has to use the platform, or is it just to use the template online? Maybe if Alex could put a bit of clarification back into the chat, then we can come on to that.
I wonder if Alex, and it'd be great to have your confirmation on this, Alex. I wonder if, Alex, you're wondering whether, if you're putting information into the Smart Carbon platform, and obviously our support as a group ends in January, can you take the information you've already put into that platform and take it away after the project ends? Is the carbon reduction plan that you make on the Smart Carbon platform something that you can take away so that you don't have to have that ongoing platform access?
Yes, if that's what you mean, and it does make sense that it would mean that, it is, the end product is a Word document. So all of your numbers that you enter into the platform, which is essentially an online calculator that's structured in a particular way, it then generates a Word document that summarises that data into a table. You can also do a data export, which will spit it out in a CSV file, I think it is, which is similar to Excel, which is just all of the numbers. So it will keep all of the numbers and the headings. The Word document you get will be your baseline report. So that will be the summary of your total emissions for your baseline year. So the first year that you're measuring as the starting point. When we then create your carbon reduction plan, what we'll do is add extra sections into the baseline reports to cover what you need to cover in a carbon reduction plan for PPN 006 compliance, which is things like your commitment to net zero, your targets, your target dates, and making sure that we're drawn out what you've projects you've already done and decarbonisation projects that you're planning, which is kind of touched upon anyway in the baseline report. So again, we'll add in those sections in a Word document and send you the Word document. So you will have the information. You won't have the calculator, but you will have the information you put into the calculator, and you'll have the information that the calculator spits out in terms of a report, and the extra work we've done with you to write the extra sections for your carbon reduction plan. Alex, does that answer your question, Alex?
He put in the chat that was the correct picking up of the question. So
well done, Annalisa, for understanding and translating. Thank you. Next one.
So does your tool link to apps such as QuickBooks or Xero?
Unfortunately not, no.
Okay.
I think you can do a bulk data upload. I'm not sure how you do that. I can find out, and we can see whether or not that's useful to you. But no, you can't automatically draw information out of QuickBooks. You'll need to download it and do some kind of categorization and make sure you exclude those things that I talked about excluding before you then upload it into the platform.
And then John is wondering if there's a set of criteria which will allow them to decide if they qualify for the Smart Carbon Light. with it, by the sounds of it, they're quite a small community organisation, so a lot of maybe the things that we're talking about being recorded this afternoon maybe isn't something that is relevant for them.
The difference between the two, Smart Carbon Light, the main difference is that when it comes to purchase goods and services, on the main platform, we've got that categorized into different types of things. So it might be what you spend on, I don't know, food, for example, food products versus what you spend on vehicles. It might be something like that. Whereas in Smart Carbon Light, it's one figure for the total amount that you spend on anything. It's just one line. It's very kind of averaged. That's the main difference. So for your organization, if it's very straightforward and not much of that in it, by the time we take out what's irrelevant, it probably won't look that different. So what we can do is we can send it to you, we can set it up for you, you can have a look at it, and most of the other stuff will have disappeared. So it doesn't feel overwhelming. If you still don't think it's something that it's too much for you, we can then move you over into Smart Carbon Light, but there'll be very little difference between the two by the time we've tailored it to you and what's relevant to you.
Perfect, that sounds good. I think that's us caught up with the questions in the chat and the Q&A section. So if anyone's got any last minute things they want to pop in, then we'll keep up to date on those. Oh, something else just came in. So can we still have help with a baseline report and a subsequent plan, even if we are not able to go for the grant this time around?
Yes, the two things are completely separate. Well, not completely separate, but you can do one or the other or both. Well, it does help you a little bit if you wanted to go for a grant, but you're not really sure what type of activity is best for you. You might want to look at your carbon footprint first to help pinpoint actually what's really important for me is to get off of gas. Therefore, I'm going to do something around getting off of gas. But it's not essential. You might already have a project in mind that you know is going to save you energy or save carbon in a different way.
And I think just on that as well, there are sometimes grants that are available not just through the council, but through other funding bodies, for especially for community organisations, for example, national lottery funding, that sort of thing, where going away and doing a carbon reduction plan like this is really helpful for the information that would go into those applications in future. So as you say, Susan, if you're not ready to access a grant at this point in time because actually you haven't even thought yet about your carbon footprint and you haven't even thought about what your different assets are, so there's nothing you can really apply for at this point in time, then actually looking at developing that carbon reduction plan can really give you a great idea of how to kind of start on your net zero journey, and can give you some of the figures that you might need to start putting into applications in future, whether that's more UK Shared Prosperity Fund, for example, if there's new rounds of that in future, or as I say, if there's anything through other funding bodies in the kind of charity funding sector, for example, or anything that the council might put out in future, of course. So you'll be kind of shovel ready almost to put those applications together if you've been through that sort of planning process. So it's a really good way to kind of start you on that process and to get you kind of primed and ready for other grants that might be coming round the corner in future. And the grants that are available this time are limited in terms of the total pot that's available. So not everybody who applies is going to be able to get the funding this time round. So it's really good to do both if you can. And if you're not ready for the grant, that's absolutely fine. Just go and do your carbon reduction plan.
Let's just see, one just came in. Oh no, that's fine. I'll Heather, I'll message you after this, so just about getting on to the future webinars. But yeah, I think that's us caught up so far with the questions that are in the chat.
Super. Thanks very much, Claire. In which case, I will just give you a reminder of the key dates that are coming up for your diaries. So next week, in fact, actually before our in-person event on Friday the 26th, we do have a third webinar. So that's part 3. That is on Tuesday the 23rd. So same time, same place next week. We'll send you the registration link for that. It should also be on our website as well. Molly, do you want to touch quickly on what we're covering? Because I think some of the questions that we've had today really feed into what you'll be talking about next week.
Yeah, so what we're going to be doing is the next step, which is looking at, okay, you've collated all of this data now. How do you actually then enter it into the platform? So a substantial part of that will actually be a live demo. I'll kind of screen share, show you the platform, open up a template as if it's one of your organizations and show you how to start putting the data into it. So that's the main part of it. And then just explain, as I touched on at the end there, what happens. That will then, once you finish that, how you then generate the baseline report, which is your total carbon footprint for that baseline. And then what we do to turn that into, add the extra bits in to turn that into a carbon reduction plan. So yes, that's what to expect next week.
Super. And then next Friday, so a few days later, Molly and I will be joined by our colleagues Lee and Oliver. We've got a full in-person session. It's at the council chamber in Kettering, at Bowling Green Road. So you're very welcome to either session. We've got the morning session is going to be a little bit more tailored towards businesses, and the afternoon session is going to be a little bit more tailored towards community organisations. We've had some emails from people saying that they can't make the afternoon session, for example, so they prefer to come in the morning, even if they're a community organisation. That's absolutely fine. A lot of the information is similar for both businesses and community groups, so don't worry if you can't attend your relevant session. Please just book yourself in for the other one. That's absolutely fine. Across the lunchtime period, we'll also be running a kind of drop-in clinic. So that's where you can chat to us more on a one-on-one basis to take you through the grant application forms, but also to look more in detail at the platform, for example, and what that carbon reduction plan might look like. So that will be in a kind of adjacent room to the council chamber, but those 2 main sessions will be going on either side. So you've got an opportunity to hear a bit more about the programme, get a bit more in-depth information in terms of carbon reduction as a whole, the grants themselves, but then the opportunity to come and pester us one-on-one, which we are very open to. So that is next Friday. So it'd be great to see as many of you as possible here. This is just a reminder of the webinars that are up and coming. So next week, Molly's just been through the Smart Carbon platform. Same time, same place, next Tuesday at 2 p.m, in-person event next week. We're then going to run a series of repeated webinars. You can look at these online, of course, but we are going to be running them again because we really value having those in-person questions coming through. They seem to be different every time. So if you want a reminder and you want to attend live again, great. If you know people who've missed the first couple of webinars that want to come to a repeat, they will be up to book on the website shortly. And then we're running the whole session again sort of later in October, early November. So plenty of opportunities to get extra information. I can see, Claire, is there any other questions in the chat before we close?
No, we're all caught up there.
Great. Super. Oh,
sorry, there was
Alex,
one literally just appeared from Alex. So did you just say that?
What does Alex say? I'm not available for the in-person event. Will there be information available from this event, please? Yes, there will. There won't be kind of a recording of the event like the rest of the events. But if there's additional information that we are providing, for example, through slide decks and things, we will share those on the poweringchange.urbanforesight.com website. So you won't be missing out on information. But obviously in person is a great opportunity to ask additional questions. And I would say also in our experience, it's really useful to sit with other people in the room who are also going through the same journey. I think a lot of people who are on these webinars are potentially right at the start of that net zero journey. So they're a bit apprehensive about where to begin, and actually you'll find that there'll be other people in the room in the same boat. So there won't be any stupid questions. It's a really nice kind of open setting to discuss kind of how you take your next steps. Anything else, Claire, before we close?
Nope, nothing in the chat. That's us.
Super. Excellent. Well, thank you very much, everybody, for attending. This recording will be available on our website. We hope to see as many of you as possible next week, both online and in person. In the meantime, you'll get a follow-up with various links to the form to fill in to register on the Smart Carbon platform, and also the links to book in one-on-one sessions to go through your grant application forms, and the links to the grants themselves with extra information on eligibility and what each of those projects could cover. So thank you very much, everyone. Have a great rest of your afternoon, and we'll hope to see many of you next week.